Hey guys, welcome back to my YouTube channel. So in today's video we are going to talk about what is fair value gap and what is imbalance, right? And what is the valid fair value gap, right? So without wasting time, let's get started. Okay, so we are on the Euro USD chart, right? And we are on daily time frame, and we can see that price is reacting from this point of interest, right? So now look closely, that what's the fair value gap. You can see between these three candles, this candle's wick this candle's wick is not meeting this candle's wick. Okay, these wicks are not meeting, so what's in between there? It's a gap. Okay, so we mark these gaps, and from this position price falls down. Okay, and why this one is valid? Because it is in a premium zone above the equilibrium. Okay, so that's why we are considering this. And so from this fair value gap is only valid when it has taken the liquidity from the buy side or the sell side, and then if we get a fair value gap, it is countable. Okay, and if you want to know about what's imbalance is a loss of fair value gap, right? This one and this one. Okay, these are called imbalance, and this should get filled in future. Like in this right now, you can see that price has reached in this fair value gap, and there is another fair value gap over here. So price can reach and fill this fair value gap, and then can fall down into this sell side liquidity. Okay, so I will do hindsight, because you guys were asking in comment section to make a video on fair value gap, so I can spot fair value gap nicely, and you will be able to understand if I do the hindsight. Like, see it over here. Price broke this level, went up, gave a nice fair value gap, right? And then price went back into the fair value gap and then shoots up. Okay, so these are the fair value gaps, and fair value gaps should be taken with the daily order flow, not with against the daily order flow. If you are against the daily order flow, like the daily order flow was what? It was bearish, so we will take the fair value gap which will be responsible for shorts, or which will be responsible for taking sells. Okay, so see it over here on 5-minute chart. I should show you the setup. Let's see it over here. Price ran above this high, and this was the previous day New York opening high. This one, you can see the time below over here. It's 8 or 8:15, like random, like it's close to that, close to 8:30. So you can see the liquidity is taken, and above this is the buy side liquidity. If you are new to my channel, you will not get this, and if you are old, you will get to know that what's the buy side and what's the sell side. Here you can see that there was a breaker, right, of this swing over here, right? There was a breaker. So, and now which fair value gap we will have to take? We will have to take this fair value gap over here. As you can see how price went into it and then goes for the sell side for this fair value gap over here, and it respects it once, but after that it just disrespect this fair value gap. Because why? Because our daily order flow is what? Bearish, right? Think so, bearish. Okay, so see it over here. So price went up. This was the fair value gap. Why will not use this fair value gap? This fair value gap is not being chosen because we will choose the fair value gap which is in a premium zone. This fair value gap is also in a premium zone, but it's little bit filled over here, and this zone over here was not even touched, right? So we wait, and when the price came back into it, it filled the gap and then it shorts down. Okay, so this is the fair value gap theory. Okay, and this is over here, and over here you can also see that if you don't want to enter over here, you can wait for another breaker, like over here. Price gave another fair value gap. Over here, another fair value gap. Price went up in this fair value gap and then shorts down to this sell side liquidity, which will be below over here. So this is how the fair value gap works. We will not take this fair value gap over here as it respects over here, but after long, it's not for the long term, because what's our bias? We know that we took the buy side liquidity, so we will going shorts, right? So we will take the fair value gap which will be responsible for what? For sells. Okay, and that's why we will not choose this fair value gap and all of that. So I think you understood the fair value gap, and now let's understand the imbalance. Okay, like here over you can see this is called the pure imbalance, and I think so it was a news. Here are lots of imbalance like this one, this one, and lots of over here also, and another one over here. So this imbalances should be filled in the future, but this imbalance didn't took the buy side liquidity as it took from here. Okay, but it took the sell side also from downside, so in future it can get respected, but we will have to see for another confirmation to take another entry. Okay, so I hope you understood that what's imbalance. When there are lots of fair value gaps without the sweep of buy side or sell side liquidity, then it's called the imbalance, and the fair value gap is then considerable when it has taken the buy side liquidity, and then after that a breaker, and after the breaker, like this, after this breaker, the fair value gap which occurs, that's the valid fair value gap which we should choose to take our trades. Okay, so I hope you understood that what's imbalance and what's fair value gap. So let me know that what are your questions in the comment section, so I can make another video and I can clear your doubts. And please like, share and subscribe, and let me know that on what topics you guys want videos. Okay, so I will make it and I will post it on YouTube. And till the next time,